money, an incredibly timely topic given the current market volatility. Please welcome Melissa Armo.
Testing, testing, can you hear me?
Hey, hear you.
And where is the thing to put my slide up, Anthony?
Let me get that for you. Should be able to now.
Perfect. Let me know if you can see my slides.
I could see it. Can the audience see it?
Great. Since we're starting a little late here, you want me to, it's 12:05, okay, Anthony?
Yeah,
About
that
45
works.
minutes?
Thank you.
Okay, great. Perfect. Thank you so much. Great to be here. Very interesting times. Market gap down this morning. We're going to talk about gaps today. We're going to talk about shorting, which is my favorite topic. And of course, 2025 has been an amazing year to short. Part of it was tariffs. Part of it's been economic data. People worried about the Fed. There's lots of things going on right now in the market. And again, I prefer to short. So today I'm going to talk about shorting stocks for fast profits in gaps on the side of institutional money. And if you have any questions, there's me. As we go along, you can email me at melissathestockswoosh.com. You can call me at 929-3200-GAP. And you can follow me on Twitter, which is now X, or Facebook, YouTube, or Skype. So again, I appear on TV, talk about the stock market, which is really interesting because everyone's been wanting to talk to me about tariffs. And, whether you follow the news or you don't follow the news, you can always give a reason that you could specify you're taking this trade because of X, Y, Z on a fundamental reason. But that's really not why I decide to take trades. I decide to take trades based on technical analysis, or what I call advanced technical analysis in the gap. And right now it's earnings season. If you're trading right now, you're aware of that. If you're not trading, you're thinking about getting into it. Earnings season is the most advantageous time to trade. It's the most profitable time to trade. Notwithstanding the volatility we've had to start off the year, we had very big moves in stocks in the market even before earnings season started. Tonight is two of the biggest earnings, Microsoft and Meta, and then tomorrow night is Amazon and Apple. And so even though we're getting into the summer, it's actually a great time to trade. And trading is a great summer job because I like to do day trades. I do options too. But I do the fast, quick day trades in the morning where I'm in and out of trades very quickly, usually in the first half hour of the day. And again, it's a great summer job because I'm usually done by 10 a.m., 10:15. That's how I'm able to be here with you today before lunch. Because if I was trading all day long, every single solitary day, I wouldn't be able to teach classes or do webinars on the side. So it really is a great summer job, but of course you have to know how to trade in order to make money. And you have one goal when you trade, and that's to make money. So a lot of times people are looking to buy the dip, particularly with the sell-off that we had. That to me is not a strategy, and I'll explain more about that in a little bit here. But in some markets, that works. And what type of market would that work? Very, very bullish market. 2024 was a bullish year. 2023 was a bullish year. 2025 has not been a bullish year in the market. Okay. So again, if you are someone that veers to the long side, that usually focuses on going long, you may have difficulty this year making money unless you learn how to short. So learning how to short is very, very important. And again, you need to know how to do that in order to be successful. And if anybody has any questions, you can plop it in the chat. Anthony, I don't know if I would see people's questions in the chat, if there's a separate chat for that. I only see your chat with me, just to let you know. I don't know if there's another chat. If anybody has questions, they can ask me when they go along, but I don't know if I can see them. Anyways, if you're thinking about doing this for a career as a trader, you need to know, again, how much time do you have to devote to trading every single day? How much time do you have to devote to trading each week? And then can you make the time, the necessary time to actually learn it? So my class where I teach my method is once a month on a weekend. The class for May is this weekend, May 3rd and 4th. So you'd have to have one weekend, Saturday and Sunday, to devote to learning it. And then you'd have to have during the morning between 9:30 and 10 available to trade. So whether you want to do it part-time or full-time, it's one of those things where it is a nice career because you don't have to work 40, 50 hours a week. The market isn't even open that many hours a week, okay? Now, again, it's one of these things where if you're in a situation where you're happy with your job, you like what you're doing, but you just want to make extra money because of the times of the economy or you're retired, say, for example, that's okay too. That's fine too. You need to have your goals set out, how much money you want to make, and again, how are you going to achieve those goals? So I know we're deep into 4 months, which is hard to believe, into 2025, but I did put the stats for last year in here so you could see an entire year stats for the day trade room for the whole year of 2024, just to show you. For last year, my average risk of my day trades was around 3,500 last year. I bumped it up slightly for this year. I made over 901,000. It was a 69% win ratio for the year in the room. So I call trades in the room live, the entry, the stop, and the exit, if you decide that you want to join. I also do options. Again, my options are a newsletter. You don't have to be in the room, but it's the same strategy, the same system based on gaps, which I'm going to talk about in a minute. These were the stats for last year. Again, I'm risking more in my options, around $8,000 a trade. So it was over 3.8 million for options. Again, I was risking more, and my win ratio was slightly better for the options. It was a 7%. So again, what does that mean? That means for every 10 trades you take with me, figure 7 are going to win and 3 are going to lose. And that's the way that you have to size yourself. So last year's results, 2024, all of day trades and options for the entire year, over 4.7 million was a good year. But we're off to a good start so far for 2025. This is through yesterday, actually. We did eat. I didn't put this trade in here, but you can look up the chart. If we have time at the end, I can bring it up. We shorted eat yesterday. It was a nice short. It was an earnings trade. Like I said, it's earnings right now. And again, I bumped up my risk slightly for 2025 because I had a good year last year. 469,857 for 2025 room results, 69% win ratio. And for options, we've had a huge start to the year. Huge. So already on pace to eclipse last year just because of the fact that we've had so many moves in the market. There were moves to the downside that happened a few weeks ago. We captured that. We were already in puts before those moves happened, and they were huge trades. So again, I've kept my risk actually pretty much the same for my options, around 8,000 over 2.1. And we're at a 76% win ratio for options this year. So I hope I can keep it up all year like this or get up to 80. It's been a phenomenal year to do options. And one of the reasons that people love to do options is because you can trade options with a $2,000 account. You don't need a margin account. You can open up a cash account, or you can trade your IRA. But for me personally, the reason that I like to do options is because of the fact that I can hold overnight, okay? And again, that is something that, you know, for me, I find advantageous. Most people, though, like to trade options because you're not on margin. So whatever works for you, you know. But so far this year, year to date, 2.5, good start to the year. Great start to the year. And again, earnings season, 2 big earnings out tonight. 2 big earnings out Thursday night. More data out on Friday morning. We had data this morning, two data points this morning. This is going to continue to be lots of chances for you to make money and opportunity in the overall market. But again, like I was saying, if this is really something that you want to do, you need to put your whole self into it. It doesn't mean 40, 50 hours a week. It means having a positive attitude, being committed to it. Again, all of the things that you would normally do in any career. You know, if you took a brand new job and you start a new job, you wouldn't be positive and happy about it for a day or a week and then say, oh, I hate this thing. Which unfortunately was a lot of people when they start trading, they don't know what they're doing, they don't have a strategy, they start losing money because they don't know what they're doing, and then they have a negative attitude. Don't let yourself go down into that. You want to have a positive attitude, and you want to keep that positive attitude because it's very important. Because if you go into that negative attitude, it's going to be tough for you to pull yourself up and around from it. And again, I've been teaching people for actually 14 years now, so I understand going through my own process and teaching people for a long time now how people can very easily get into that negative attitude, and then it takes a lot to pull themselves around. But what you can do to pull yourself around is actually start winning, because it's amazing when you have a series of gains or winners, even if it's a little tiny gainers, Monday, Tuesday, Wednesday, Thursday, Friday, you have a series of winners that will really help you to get to the point where you can realize that you can do it. Because in order to become successful, you really need a positive attitude, you need a system, and you need a niche. So what is my niche? Shorting, number 1, and number 2, I focus on gaps, okay, which is something very unusual that not everybody does. A lot of people are looking at different indicators. Like I said, they're looking at support and resistance or buying dips. I'm looking at the gap when I look at a chart. And again, I'll talk about that a little bit more here in a minute. But you can make money in the market. People do it all the time. Unfortunately, not everyone does. It's always going to be the way that you have more people that lose than win, and the people that win make a lot of money. It's always the way. So again, it's a zero-sum game. That's from the movie Wall Street. Michael Douglas said that. His character in the movie said it's a zero-sum game. You want to be a winner. You have to have the drive, the ambition, and the intellect and the know-how. And if you're one of those people where you're like, I don't know where to start, I don't know what to do, again, following someone that knows what they're doing, that can mentor you, is the most important thing. But again, getting back to the meat and potatoes of it, you need a good system to succeed. You have to follow it daily. You don't veer off of it, even under changing market conditions. You stay on top of what you know, and then you will succeed. So for me, like I said, what do? I focus on gaps. Now, what is a gap? A gap is the difference between the close and the open. So the market gapped down today. So do I short every bearish gap? No. Do I go long every bullish gap? No. Do I go long every bearish gap? No. Do I short every bullish gap? No. So it's not that easy. People want to do gaps as gap fills. If it was that easy to trade, no one would ever lose. You have to analyze and look at what's happening in the gap itself on the chart to be able to figure it out and pick it out. So it's about, for me, the reason that I prefer to short, I will just tell you, is because I like the fast moves. I like the quick moves. And many times that does come along with volatility. It's the unexpected. You could get volatility to the upside. That's very rare. Very, very rare, actually. But for the most part, you get volatility where stocks are selling off. And that's how you get the fast moves. And obviously moves to the downside do move bigger and faster than moves to the upside. So here's a chart. This is a chart of Apple. This isn't from today. This is from yesterday, actually. I'll just look at here what happened. But you can see really, again, several gaps and the momentum. Let's just go over it. Oops. Anthony, I still don't see questions, so I don't know if I'm set up as a presenter to see questions or no one's asked any yet. I'm seeing your chat, but just FYI, because I can't see any questions if anyone's trying to ask me anything. Anyways, this is a gap. Stock closed here, gap down. Apple was up here. I'm going way, way back, almost a month ago. This was April 2nd. Apple was up here, closed around 222 and change. Boom. Gap down in the morning. This was April 3rd. Opened above 200, fell. So this is a bearish gap. So again, it closed at one price at 4 o'clock and opened at a different price at 9:30. That's a gap. Now, that's a bearish gap, okay? Now, what is a bullish gap? This is a bullish gap. Let's take a look at it. Stock closed here at one price, around 196 and change, and opened up here around 208-ish, 209-ish. This is a gap up. Now, again, I didn't short this. Again, this is a bullish gap, but I just want to show you the difference between a bullish gap and a bearish gap. So you can't, like I said, just take every gap in the direction of the gap or reverse it. Again, if it was that easy to trade, no one would ever lose. You wouldn't even have to think. You could just be a robot. But what do? How did I determine Apple was lower? How did I determine the market was lower? How did I get this trade to do it, to get this sell-off, which I did? Again, I'm rating the gaps based on a 26-point criteria, which has nothing to do with fundamentals at all. It has to do with the daily chart. So I'm on the daily chart, and this is what I teach in the class. It's a 16-hour class. So no matter what, whether Trump talks about tariffs or tariffs are paused or tariffs are on, or the earnings are good or the earnings are bad, I'm looking at the price action of what's happening in the chart in the gap to make a determination if I want to take a trade in it or if I don't want to do a trade in it at all. Okay? Any questions here so far? I don't know if I can see the questions, though, because I don't see a questions box. So I don't know if I'm set up to see questions or not, Anthony, and you're not answering me back. So I'm sorry if you're asking me questions, I can't see it, unless no one's asking any. Okay, I'm going to keep talking. So are you doing everything you can right now to position yourself for the future? Again, this is one of these things where if you're in the thick of it and you're like, oh my God, my 401k has been really hit this year. I don't know what's going to happen. I don't know if I should go long here, if I should sell, if I should have sold, whatever. Again, if you're an active trader like me, I consider myself an active trader where I'm trying to chunk it out, take quick trades, even an option in a week or two is a quick trade to me. I'm looking to pull money out of the market on a consistent, regular basis. But it is important to know, even for your long-term positions, your retirement positions, swing trades if you're doing them, Again, your retirement account, where is the market headed? Where could we go? So again, if you like to follow fundamentals, if that's your thing, the market gapped down this morning because we had a contraction in the economic data report that came up this morning that people now are worried or concerned we could possibly go into a recession, which has been a point of discussion that I've been talking about on TV for the last several months because everyone's been worried about tariffs. Does that mean that we're necessarily going to go into recession? No, but it's certainly something you should be aware of for your long-term positions. And again, if you're someone that does not know how to short, if you only know how to go long, that could be a problem. Because what if you're going to miss out on lots of opportunities to short, which again, you might have already missed out on this year if you didn't get the moves down when we sold off. So again, like I was saying, we had a lot of volatility this year. It's been a great start to the year. I did not anticipate some of the moves we've had this year. I don't think it's over. I think we're going to see more volatility. And to be honest with you, this is some of the best trading I've ever seen that I've seen this year. Like even COVID, which was a once off, which knock on wood, I hope we never see anything like that again. But this volatility that we've seen, and you could say it's a result of the tariffs or whatever you want to say, but it's some of the best trading I've ever seen in my career. Never really seen these types of moves like this. So I really think there's a lot of opportunity in the market this year. And again, like I said, it's some of the best trading I've ever seen, and I've been trading now for 17 years. So I think it's a very special time to trade. I think there's going to be continued opportunities this year, particularly to the downside. And again, you can't short everything, but you need to know what to short and where. So how do I figure it out? I rate the gap using a 26-point rating system. This is what I teach in the class. So I get up in the morning and I prepare what I want to trade even before the market opens. So the market opens every day at 9:30. So I usually get up early, take an hour, go through, rate the gaps, and decide what I want to do. And then I have a watch list, and I usually look at one or two things, and I narrow it down to what I want to do and try to figure it out and try to do one trade a day if possible. And again, I'm doing it based on the gap. So what is a gap? A gap is a difference between the close and the open. Stocks gap most every single day. Not every gap is a good gap, or what I call a golden gap. I'm looking for gaps that are predictable. And how do I do that? I use my gap rating system. And again, if you have something where you could give an opinion on it, well, everybody has a different opinion. Again, we had 2 data points this morning. The second data point, you could say, well, I have a good opinion on that. Some people might say, I have a negative opinion on that. This isn't a question where it's maybe this or maybe that, or I think it's good or I think it's bad. I have a criteria that I look at, and I follow it to the letter. And again, I've been doing this for 17 years. So if it rates 20 points or more, the gap, on the daily chart, then I take the trade in the direction of the gap. And again, I prefer to short, so I go with the short side first. It's not maybe, or I think this, or I think that. I'm going with the rating. So it takes the guessing out of it. And again, I know, because I've been trading my system for a long time, what are my percentages? I'm looking for high odds in the trade. That's why I'm trying to keep the trades 20 points or more, stay within that criteria, not skip around it. And if I do, then I know I'm going to have around a 70% win ratio. Again, it doesn't mean that every trade works, but it means that more will work than don't. And that's where I try to stay within it to keep myself on the right side of things. Again, even despite all kinds of chitter chatter with different economic data. So again, let's take a look at it. What is a gap? So here's the QQQ. Stock closed here, gap down. Closed up here around 473. Again, we're back here on April 2nd. Gap down here on April 3rd. Okay, again, open lower. And we were right here, snug as a bug, around 450 something and change. Open, fell. So again, this was almost a month ago. And then wherever we are today, we were down in here today, and then we dropped, and then we were pushing back. But again, this is a gap, okay? So every day at 4 o'clock, the market and everything closes, and every day it opens at 9:30. Any questions here so far? Anthony, I don't know if you're there. I don't see questions, so I don't know if I have the right box up as a presenter. But you're not answering me. But if anybody has any questions and I can't see any questions, just email me. So anyways, like I said, I'm looking for momentum in the gap, okay, to make money. So again, how do I do that? If the stock drops $1 and I have 1,000 shares and I short it, I can make $1,000. So again, it has to do with getting the move. Number one, you have to get the direction right. And number two, I preferably want to see a big move, okay? And I think $1 is a big move, okay? Or more than that. It depends, obviously, what stock I'm doing. But even in the market, even if I'm shorting the QQQs, I consider the dollar a pretty big move. Again, think about it. Momentum. If you have 1,000 shares of a stock and short it and it drops $1, you'll make how much? Like I said, $1,000. And if you have 1,000 shares of a stock and short it and it drops 10 cents, what are you going to make? $100. So what would you rather make? So again, I would call that a scalp. Okay, so I'm not scalping. I'm trying to get big moves, momentum moves, $1, $2. Again, Tesla today dropped down almost $10. Okay. So again, that is what I consider momentum. Particularly if you're doing options, you have to get momentum because again, the cost of options and some of these things we've been doing, I mean, some of them have been a little pricey. So you've got to get the move and you got to get the direction right. So again, the key to day trading stocks successfully is using a system. Trade a system that sets up daily with a high level of predictability in the directional move. And number two, trade a system that works independently of the market and does not need the market with it to work. So again, I've been shorting since I started my career when the market over most of the years was mostly bullish. Now, I will say this, and I could be the only person that says this, but the market is actually in a downtrend right now. So the market is still in a downtrend since we had that move back from a month ago. So most of the life of the market, though, it is usually in an uptrend. And there's times when the market will go in a downtrend. Of course, we did that with COVID. But again, there's different times it will go and it will move in a downtrend. But I've been shorting stocks even in the market in an uptrend. Okay. So you can short stocks or the market in an uptrend or a downtrend. So what's the difference? Well, if you have the market with you, you can get bigger moves, which is good. Okay. Obviously that's what we want. So again, success or failure has everything to do with the quality of your system. You have to have a good system in order to trade. If you don't have a system at all, it's going to be very difficult for you to make money. And again, you're going to be listening to this person, that person. Again, I talk on TV, but I'm not going over my system on TV. I'm giving my opinion, and everybody's giving their opinion on TV. How do you know what that's going to do in order to see what actually happens to take a position or risk your money? You need to be more thoughtful about that when you're making trades. So like I said, my niche is shorting. I'm looking for the fast moves, the quick moves. And again, that's what I want to do because that gives me a niche because most retail traders, and I don't know why, this was never me, but most retail traders prefer to go long. So a lot of people don't know how to short. But you really do need a niche in order to be successful. If you want to trade like everyone else out there, then your results will be like everyone else. And if you want to have outstanding results in your trading, you need to be different. It's extremely important. So my method is based on reading institutional money, like we saw in the Apple, like we saw in the Qs, like you saw even in the Tesla sell-off today, that moves stocks and gaps. Not all gaps are made with institutional money. This is one reason why people often are confused reading gap direction. But it is not confusing if you have a method to review it daily. So again, here's another chart of the QQQs where again, we were in the market, okay, before this move happened. So we were in puts before we got this drop, which was huge. I don't know if anybody remembers this. Was down in here. This was April 7th. Again, that was less than a month ago. And the QQQs touched and broke 400. So this is the type of trade you want to get. Not these little wiggles and jiggles here we've had for the last couple of days. The market, in my opinion, has been very choppy in the last 2 weeks. Now, last week was a holiday, but or the week after the holiday. But again, 2 big earnings out tonight, 2 big earnings out tomorrow. The market's going to have a big move between now and Friday. Plus, we have data Friday for sure. So are you on the right side of it is a question. Are you going to see it to play the right side of it? Again, is a question. So my niche is gaps, like I said, and also shorting. So how can you make money shorting? You make money short when the stock price drops, period. Easy, simple. And again, who can short? Well, you can buy a put if you don't have a margin account. You can set it up as a cash account. You can buy a put is a short as an option. If you want to set up a margin account, you can short. Again, I'm doing both. Anyone can short as long as you have an account to set up to short. You can even set up a prop account to short. Retail traders and professional traders can both short. So again, selling happens fast, very, very fast, done usually early in the morning and quick. That's what I'm looking for. Here was one that we did. This was Apple. Again, this feels like a long time ago. Apple earnings for Thursday night. I don't know what they're going to say, but I'm certainly going to be watching it. So here was Apple here on the 3rd. We did a day trade. I shorted it, 203.70, boom, got the drop. Again, a little bit more than a buck, 202.60. Profit was $2,750. This little tiny guy here, and again, I could have held this longer. I didn't even get out of this near the low of the day. I just got in and out quick. That's what I like to do. That's what I'm into doing. Did the day trade, done. Again, did an option in this too, but I'm just showing you the fast day trade, boom. And that's what I call in the room. I also did NVIDIA. This is one of my top watches here. I've been watching this. 417 right here. Stock close here, gap down, open, dropped, boom. Again, shorted at 103.60. Got out, 102.90, made 2,800 bucks, out, done. This continued too. I just want to show you how this came all the way down and broke 100. So again, that's another opportunity, quick trade, in and out. And again, you could have done a put if you had wanted to do a put in it if you didn't have a margin account. But for me, I like to do both because if I'm doing an option, I like to hold it. If I'm doing a day trade, I like to get out quick. Again, there's some people with me that are doing one or the other of both. But there's opportunities no matter what. If you get the momentum and you're willing to look at it and see and say, well, this could go here. What's the normal target? What's the dream target? Do we have the market with us? Here was the one Apple trade that we did, which was 328. And we did the 215 puts that expired the 4th. So here's what happened with this trade. Here's where, this is the week that I was telling you we were in the trade. We're ready. Stock close here, gap down. We did the trade. We did the 215 puts, backed up. And then we got it. Boop. There it went. Look at that. Anthony, I think you just opened up the questions. I don't know if that means I'll see back the questions or not. Let's see. I didn't see anybody's questions up until now. I don't know if I can go back and see back ones or not. I knew something was up with that. Anyways, here was the Apple move. You see it? Let me see if I can answer people's questions now. I didn't have access to the questions, sorry. Let me just try to go back. Sorry about this. I couldn't see what was going on because I didn't have access to questions. Let me just go back. For the results, someone's asking, Larry's asking, what should a balance sheet have to start for the results? First of all, if you're starting out trading, you mean the stats at the beginning are showing you to risk $8,000 an option and $3,500 for a margin trade. You know, honestly, if you were going to take the class and you're going to risk as much as I am, I think that's, I wouldn't advise that because you need to learn and start doing it first yourself, even if you have the cash. I would start out slow, no matter what, even if you had the cash. So that's my 2 cents because you're going to have questions, you're going to learn it, you're going to have a learning curve no matter what. Even if you're following me, you're going to have a learning curve. But again, ideally, you would never want to risk your entire account anyways. So I will tell you, I could be in 15 options at once. So if I'm doing trades and I have $8,000 at risk, you know, times 15, you got to figure I would be, you know, just on the safe side of it, have a couple $100,000. Now, again, ideally, you should have $500,000 to $1 million to be able to hit these kinds of marks. And then you're still looking at making, you know, a 400% on your money or more at the end of the year. But I want to be clear, even if you have that cash, I think you should start out slow. And you also don't need to be taking the risk that I'm taking. I just got done telling you I'm trading for 17 years. When I started out trading, I took my day trades. I was risking $150 a trade. If I made money, then I made $300, $400. And if I lost, then I lost 150 bucks. When I started doing options, which I didn't start doing right when I started trading in 2008, I started out trading $1,500 risk. And then I bumped it up to 4,000, and then I bumped it up to 8,000 too quickly, and I started losing, and then I bumped it back. So you have to gauge yourself, even if you have the cash. Like, let's say you have 100 grand. You could do, all the trades I'm calling, but you couldn't risk $8,000 a trade. You could certainly risk 1,000 or 1,500, and that's still good money. And then as you grow that $100,000 account to 200 and 200 to 300, then you can start layering on the risk. So that's my take on that. Again, I would start out slow no matter what you're doing. And I want to say something else. Let me just see these other questions because I want to say something else. Oh, that was it. That was all the questions. I did a video. It's on YouTube. I'm getting short of time here. I only have 15 more minutes. I want to get through some stuff. But there are places out there. I just have to get this out because people need to understand. There are places out there that are offering accounts where you pay a fee, and you may hear some speakers today say that. Make sure you do your due diligence and ask the right questions. If you are opening an account and putting your own money at risk, you're trading that money, that's what I consider a prop place. If you go to a retail place that require $25,000 for a retail account, options $2,000, it's your own money, you're trading it. They're under certain SIPC rules in the US. If you go to a place where you're paying a fee for an account, I can't verify if that account is real or not. And there'd be no way for you to do it either. Chances are it could be not real. So usually what these places do is they charge a fee. It's a fee-based system where they have certain requirements. If you meet the benchmarks, then they say they give you real money or you can get the money out. Make sure you do your due diligence with those. They're popping up like toadstools now. I don't do that. I'm not a broker. I'm going to call the trades and teach you how to trade and teach my method and do it with you. That's what I do. If you want to go to a broker, go to a licensed broker. If you're going to a place where you don't have to put up any money and they collect a fee from you, some of them are cheap and some of them are thousands of dollars. No, that's a practice account. That's a practice account. And you can practice on a demo and not pay any fee at all. So again, please be careful. I am getting solicited for these things. And I'm having people call me and tell me horror stories. They paid thousands of dollars and are wasting 6 months and a year, and they never meet the benchmarks because the benchmarks usually are impossible to make because I don't think the accounts are real. And even if they are real, the benchmarks are impossible to make. It's designed to collect a fee from you. That'd be like me. That'd be like me saying I'm going to charge you $1,000 and I'm going to give you a $100,000 account to trade. Okay, why? If I said if you made $10,000, then I'll give you the profits after that at 90%. Listen, if somebody would offer me that, I'd say no. Why? If I made 10 grand, I want the 10 grand. I want it today. If I made it today, I want it right now. So why would I work for 10 grand for you? So there's no quick fixes out there. There's no quickie thing. You got to have cash to trade. You got to have money to do my class if you want to learn it. There's a fee for my time and my information, and you want to get my calls. There's no quick get-rich-quick thing out there. It does not exist. Just know that. And be very careful when you're spending money on these types of things that I'm talking about. Because they're out there, like I'm getting an email every day about it. And I did a video on YouTube the other day because someone else just told me another horror story last week of something. And I said, gosh darn it, I'm going to have to start talking about these things to people. Because people don't realize what they're getting themselves into. They don't realize it. Okay, let me ask the last question. You're new to trying to understand what your gap system is. Can you explain better about the criteria? The criteria is what I teach in the class, which is 16 hours. And I only have another, 10, 12 minutes here. So that's what is worth the money that you would pay me for to learn. That's number one. And it would take me 16 hours. And I don't have 16 hours here today. But that criteria is a process and a learning process that you go through. Okay. I think I answered Larry's question. I didn't see it until now. Derek said I'm doing great. Okay. All right, let's go over this trade really quickly, and then I'm kind of go faster here. So this was one of the biggest trades. I think this was the biggest trade we had in April. It was $1.80 to do that trade in Apple. The trade was down until it went. Sold it at 22, and again, I risked $9,000. You didn't have to do that. You didn't have to take the risk. I did. You could have risked one contract. You could have spent $180. And you would have had 1,122% return on investment. So it doesn't matter what your risk is. It's not going to stop you from making money. You will make money if the trade works. You will lose if the trade loses. Okay? So your risk has nothing to do with the quality of the trade. You can take a small risk or a big risk. And if you have the money, you can take a big risk. But no one should be trying to make $4 million a year if you're not even making $100,000 a year or $50,000 a year or $20,000 a year. Again, most people are losing. So again, there's a lot of different people in different camps right now. Some people are losing trading. They need help. They don't have a system. They don't know what to do. Some people are break even that I talk to. They're really wasting a lot of time. They're not getting anywhere with it. That's why they're trying these other types of demo accounts. They don't want to put money up to risk anymore. They're not really losing. They're trying to see if someone else can fund them. They're not really getting anywhere. They're just spending a lot of time but churning and burning. Then there's 3 people that are profitable, are making money, not enough to support themselves, not enough to quit their job, not enough to really get excited about it anymore, too scared to take a lot of risk, and they never really have any big trades, and when they lose, they tend to lose a lot. Those are the third camps of people that I'm talking to as I'm talking to people about my class on a regular basis. So there's 3, and the fourth type of people are people that never traded, have no experience, never learned what to do, don't even know anything, and they come to me and they're starting from square one. So again, talking about in an ideal world, you should have, if you want to do as many trades as you possibly can, and even if you had a big week, or if you had a losing week, you could suffer through the losing week and carry through. Again, that's where you want to be if you're experienced, which I think takes a couple of weeks or a couple of months, even if you have the cash. For someone that has a very small account, obviously if someone has a starter account with $5,000 or less, then I would be risking no more than $200 per trade, $300, maybe $500, even that's a lot. Again, because you should never have half your account at risk at any one given point in time, and you have to be able to go through, because again, what I'm saying, you can go back and look at the stats. I want to keep going here though, but you can go back and look at the stats at the beginning. If you have 5 weeks in a row of winners, and then week 6, you don't get the market right, or you're the opposite against the direction of the market, you lose, you need to be able to push forward. And that's why, again, when I'm saying a 70% win ratio or 76% win ratio, it's not even Steven throughout the year. Does that make sense? Like, we could go weeks and weeks and weeks where every trade works, and then we could have a losing week. So again, that's why you have to consider your risk with your entire account balance. Does that make sense? And what you can stomach. Okay, good. All right, I'm going to quickly move through this here. Again, short moves happen fast. Again, I like to short because of panic. I'm looking for institutional money. It's a 26-point checklist. And again, shorting gives me a niche because people are scared when something drops and they sell off. And again, you can do this with a small account. I'm showing you my results, but I'm in the emails, from the marketing emails, if you're on my list, if you're not, if you decide to sign up for my list, you can email me and get on my list. But I show smaller risk. I show beginner risk. Again, we're talking about options. You could do an option as a put. Here was another huge one we did that same week. We did the 475 Qs, which we did on that same day, the 28th. And this was another huge trade. Now, this was more expensive. We did it. It cost $5. I sold it at $45. 800%. This week made our whole month, basically. Again, did this trade on the 28th. Here was the sell-off. So I tend to be early, just so you know, in trades. So this backed up before it went. It is exactly what Apple did, actually, too. But again, you could have done one contract. You could have risked $500. And if you had risked $500, again, you would have made $4,000. That's good. That's good. You don't have to risk $9,000. Here was another one we did Amazon. This was the same day, 328. Again, this was so cheap when I think about it. This is, again, the Thursday night. Amazon is earnings Thursday night. We'll see what it does. 320, sold it at 21. Ridiculous trade. Another one that same day. I did a bunch of stuff that day, the 328. Again, what should you expect to earn 1-to-1? You would learn the checklist and the entries and the exit in the class. It's important to have a positive attitude. But I think once you see a couple trades like this and you're on the letter and you're trading with me, you get your attitude shifts, is what I was saying. But learning is key. Learning is very important. And everyone wants to make a lot of money. I get it. But you have to take the amount of money you have and use that to build it and trade and learn as you go. And so, again, it's about taking calculated risk, not just risk for risk's sake. And I teach all of this in the class. It's a 26-point system you'll learn in the class. And I'm using this to read the market. That's how I read the market was lower, which I called in February. And that's how we were in these trades early to get that sell-off. And if you want my opinion, I actually think the market's still lower now too. So we'll see. But again, one strategy is all you need to be successful. You do not need a general overall broad-based view to make money. Tons of people have that and they don't do well. So I use a checklist daily and I teach my method in the class. It's a class on how to find, pick, and play professional bearish gaps. Class is online. You can be anywhere in the world and take it. Class tuition is $69.99. Class dates are May 3rd and 4th, 9 a.m. to 5 p.m. Eastern Time. Class is online. You can be anywhere in the world and take it. And again, it is going to teach you how to trade bearish gaps. I am doing an earnings season package special this week for the class, which ends on Friday. Of course, the class is Saturday. You will get 1 year free of the options newsletter, 1 year free of the trading room if you sign up by Friday the 2nd. This is a good deal. So you get all my trades for the year free, do the class this weekend, get going and start to trade. Any questions? Let me see. Can you show an intraday chart of your trades? If I put this up, I don't know if I have to take it off or not. I'll show you the E. I have videos on YouTube, you just go there. Can you see my chart or do I have to take it on and put it off again? So this is what we did yesterday. Boom. And again, I didn't do an option in it. Some people did an option in it. I didn't. I didn't do it, but some people did. But if I had done a put, it continued down today, actually. I said 130 dream target. There were some people that did puts because they didn't do the day trade. But anyways, 130 dream target, this basically got there. This only had monthly puts, but the put worked. So we'll go back to yesterday. I'll show you this really quickly. What was yesterday? Oh my God, tomorrow is May. I can't believe that. What the heck? This year is going so crazy fast. Anyways, here's the chart. Here it is, beautiful. I forget exactly where I got in here. Somewhere in here. Yeah, I think I got in here a little bit above this, maybe. And I got this drop into here. And I got out. So I did not hold this all the way down here. Where did it go? 133.60. I didn't hold it all the way down. So I got this drop in here, got out. Done. That was it. It was a good trade. I think I put the room on my YouTube. So you can watch the trade. Actually, you can go watch the room live. I posted it on YouTube from yesterday. If you go to the Stock Swoosh, join my Stock Swoosh on YouTube. Any questions from anyone about anything at all? Again, please be very, very careful if you're trading right now. I know what the bias is of a lot of people. Again, I've been going on TV. People have been asking me my opinion on this thing, that thing, the other thing. You know, my bias in the market is that we're going to have another drop. I don't know when. Again, there's a lot of things that are happening in the next 3 days that could affect the market. They will affect the market. So be very, very careful when you're trading. And I think it's important to follow a system, and that's the only way really you can be successful. But you have to have a winning system. And think about what I said about a lot of these accounts that are out there. Know them when you're doing these accounts. They're practice accounts. You're paying a fee to practice. If that's what you want to do, that's what you want to do. But you can get in a demo somewhere for free. So be careful. Thank you so much for having me. Thank you, Anthony.
Melissa, thank you for that incredible presentation and for your generous offer. Shorting alongside institutional money is truly a game changer. Thank you for sharing your expertise.